Okay, it is slightly after noon. It is Thursday, the 30th of March. This is the first public webinar I've done in really quite some time. I'm guessing like 6 or 8 or even 10 months. It's been a long time since I've done a public webinar. Um, Almost on a weekly basis, I get a couple of people emailing me saying, "When's your next public webinar?" It's just not something I've been doing of late. Been a lot of moves lately though, so I thought I'd throw one out there. I don't plan to do these too often. I used to do them every month, or even every 2 months, somewhere around there. I don't honestly plan to do too many of these. But if I do another one this year, I'll be surprised. But we'll see how it goes. So what I'm going to do is this. There's a lot of existing members in here, as well as a lot that obviously aren't members. I'm planning on doing this as a regular webinar. This is just a regular Tuesday/Thursday webinar where I run through charts, talk about what I'd said this morning, yesterday morning, the day before, see what worked, what didn't work, where we have changes of behavior, things that we'd looked for that did occur or did not occur, and maybe things to look for moving forward. Going to look through the same sort of charts that I normally do. Again, this is going to be a regular webinar, so whether you love it or hate it, this is pretty much what I do every Tuesday and Thursday at noon Eastern, and it's pretty much similar to what I put out every morning. I put out 2 videos each morning, one that looks at gold, silver, and at the moment, treasuries, which might sound like a slightly odd thing to do, but treasuries are really well correlated with gold right now, so I include the 30-year treasuries within the gold and silver video. And no, the dollar is not well correlated with gold right now. I'm waiting for all the comments to be typed in. Yes, it is. No, it's not. On a larger time frame, as I pointed out this morning, on a larger time frame, the dollar is correlated inversely to gold. On a smaller time frame, it is not. Look at what happened in the last 2 to 3 days in the dollar. Look what happened in the last 2 to 3 days in treasuries. Look what happened in the last 2 to 3 days in gold. Gold and treasuries are stepping sideways and actually looking a little dodgy. Dollar has actually seen a decent move to the upside. So anyway, I'm covering treasuries as part of the gold and silver videos at the moment, but that's kind of a temporary thing purely because there is such a strong correlation right now. Typically, when the dollar is working inversely to gold, the gold and silver videos are typically gold, silver, and dollar index as opposed to treasuries. So I'm just adapting to the environment. The other video I put out historically, for those of you that used to be members of the service, up until very quite recently, I used to cover the majors, so Aussie CAD, Kiwi, Swissy, Euro, Pound, and Yen. But we've actually added a whole bunch of non-FX vehicles in now, purely because specifically within the US, there's basically FX is getting a bit of a whipping. Interactive Brokers has exited the market, as probably a lot of you know. FXCM, they exited the market under a bit of a black cloud. They were basically shoved out. And so there's more increase. There is an increase in interest in non-FX pairs. So I'm looking at things like nat gas, crude oil. What else are we looking at? Cocoa, copper, cotton. I mean, basically, I'm looking at commodities, softs, ags, metals, whatever there is out there that is doing something of interest, as opposed to restricting it purely to looking at FX. So that's kind of some of the things that we're going to be looking at. With that being said, where should we start? Let's go back down. I kind of have a little way of going through these things. Let's start with E-mini S&P. Yes, here we go. So I'm not going to bore everyone by going over ad nauseum what we've been talking about for the last while, but we had turned bearish E-mini S&P back in this area here. In fact, it was pretty much right about there where I turned bearish E-mini S&P, started looking for a downtrending slope. And I said at the time, I felt that we had a downtrending slope that was starting to form. We'd already had one bounce, we had one bounce, a second bounce. And I was watching actually to see whether we would rise up and see resistance in this area here, which was around 2380. There you go, 2380. In fact, what happened was we actually had a third bounce of the line. So after having seen the two, looking at this downtrending slope as a very speculative slope. So at this point, the slope looked like that. That's how early we were looking at this particular slope in the E-mini S&P. And again, I was looking for a move to the downside, and I was kind of getting very nervous because we were starting to see a stepping down in resistance. and all sorts of things on other time frames that were making me just a little bit uncomfortable. So anyway, sure enough, next day after seeing the third bounce, I looked for 2377 resistance. That worked out well. It worked out well both in terms of the uptrending slope and the downtrending slope. And by the way, if anyone in here, I just suspect that there might be some people in here thinking, what the hell is he talking about? Where are all these lines coming from? If there's anyone in here that has never been in one of my webinars, say something, and I'll just give like a 20-second coverage of what it is that I look at, because otherwise there might be a slight confusion. But I'm hoping that most of you have probably seen some of my webinars previously, so you have an idea of what we're looking at. And you know, just in case someone's not speaking up and they have never been in, what I look for is I look for slopes. It's that simple. I look for slopes that are working. So in this case, this is the slope right here. I have used in this instance an Andrews pitchfork. Mitch says he's never been in one of my webinars. No problem, Mitch. Welcome. So what you've got to think about is that, like most people that look at charts look at horizontals, key lines of support, key lines of resistance. So they will be looking at everything in relation to a line that looks very much like that, a horizontal line. In other words, have we taken out this high in this area right here, then I become more bullish. You know, we've taken out highs. I don't look at it like that. All I look at is slopes. So, you know, just to give you an idea, and this might sound very odd, this is a higher high than this. And you're probably thinking, okay, he's been smoking something. Look, think about it this way. If we're looking at this particular channel, let me draw the circle down a bit. If we're looking at this particular channel, which again is derived from an Andrews pitchfork, there you go. So we're looking at support and resistance all the way as we go down. Then think about it this way. This high here is as high as this high here. In other words, they're both along the ceiling of the slope. If you look at it that way, you can then understand that this particular high here is actually higher than this high because it's above the slope. If that's in any way confusing, I probably haven't articulated that particularly well. Just say, I don't have a clue what you're talking about. These lows here, and here are equally low lows, okay? This is not a lower low than this low. These are equally low lows because they are on the same floor of the slope. This, slight flush. I don't get too worried about flushes as you'll learn. But this is actually a slightly lower low. So anyway, even the S&P 2377, we've been watching for 2377 resistance up in this area here. It worked, down we go. This was, I believe, Tuesday of last week. I then started watching to see whether we would, based upon the prior low, see support down in this area here. That worked out quite nicely. Up we go. And then, therefore, all we're looking for, again, you know, think about what most people look at in terms of the horizontals. If people are looking at horizontals and they see price, for example, gravitate between resistance and support, and then we take out support to the downside, what people would look for typically is, aha, let's see whether what had previously been support back in this area here, let's see if it becomes resistance. If support becomes resistance, we remain bearish, we look for a leg down to next support. Now think about it in terms of the slope. Where had we last, and again, don't think about the horizontal. Let me get rid of some lines here, or some circles rather. Think about the slope, not the horizontal. Where was the last support? So we will look to see if that support becomes resistance. And in fact, that's what we talked about as we were rising out of support. This resistance was at 23.55 from memory. There you go, 23.55. In fact, this was last Thursday's webinar. We were speaking on the webinar last Thursday, and what I said was, I think we're at resistance in the E-mini S&P at 23.55. We fell away from it Friday morning. I said, well, that worked very well. Let's look to see if it becomes resistance. Again, 23.51, and again, that worked very well. We had a bit of a fall into the weekend. We continued lower into Monday morning and then reversed higher. Can anyone see why we might have reversed higher from where we did? It was support. I mean, that's all it is. I mean, support, bit of a flush, but again, we've never at any point closed below support. So now we look for a move back to the upside. And to be fair, we were looking for support again in this area here. We didn't get it. So therefore, this bar was a change of behavior. Because if you think about it, up until that point, what we've had is a nice little channel working here. Then we have a change of behavior as we fall lower in the slope, come back up, we have resistance, resistance. We should find resistance in this area right here. Technically we did. I mean, if you actually look, we saw 23.43 and then we fell back about like 10 points and then bang, up we go. So the next place to look for resistance as far as I'm concerned would be here. Again, we had a bit of a flush, we pulled back, but now look, now we've had a very significant change of behavior, because now not only have we taken out resistance down here, but the resistance here, again, we've taken it out. And what I was watching a little earlier on this morning, a couple of hours ago, is the fact that what had been resistance has now become support, giving us a leg to the upside. So even the S&P, we've actually had a really good run over about the last 10 days in terms of calling direction. I said this morning, I'm kind of a little bit more on the sidelines for E-mini S&P, purely because if you really look at what's been going on for the last 2 or 3 days, we're kind of chopping sideways. So everything was working well up until here, which is really Tuesday, when we actually breached resistance for the first time, came up to the ultimate resistance, fell back, saw it a second time, fell back, but now look, we punch out of the slope, come back down, find support upon the slope, and now it looks like we're seeing a leg to the upside. I'm actually very nervous equities and treasuries generally right now, purely because we actually have dollar index at very key support. We've got 30-year treasuries at very key resistance. And if we do see a leg to the downside in treasuries, my gut feel is we will see a leg to the upside in equities. Equally, if we breach that daily resistance in treasuries, I'm expecting a push to the downside in E-mini S&P. So they're in kind of a key area right now. So again, we got resistance right here, it became support right here. We've had an upside breach, so therefore I would look for a move lower in treasuries because of the inverse correlation that we're seeing right now, which hopefully, again, I don't need to go into too much detail. On the uptrending slope, you know, again, you can see that that still seems to be working relatively well. Resistance, resistance, bit of a flush in this area here, resistance. So E-mini S&P, it's been working incredibly well for about the last week. As of right now, in this area right here, I'm kind of leaving it alone a little bit. And all that means is I'm going to let like today and probably tomorrow play out just to tell me what's going on in terms of this downtrending slope that had worked so well, carrying us down from 23.77 down to about the 23.20s for about a 50-point move to the downside. Let's wait and see what happens over the next day or so. So that's E-mini S&P. Another index that we now cover is the Footsie. And it's kind of an interesting week in relation to the Footsie and the British pound generally. Obviously, the Brexit process got kicked off yesterday. Article 50 got triggered. And Footsie, Francois says, why do you leave the ES alone? Oh, hang on. I think what you're saying is because I said, well, you know, in this area here, it's been chopping sideways. I'm just going to leave it alone for a day or so. All I mean by that, Francois, is I have a very strong opinion because of what we're seeing here. I have a very strong opinion because of what I see here and here and here and here. Now that we've seen changes of behavior with a breach to the upside, and a breach to the upside, and it becomes support and push back to the upside, because we're having what looks like a change of behavior, and because we've got treasuries at resistance, and because we've got dollar at support, I just think that we might be seeing a bit of a general rotation. So I'm just going to give it 24 hours just to see how things pan out. As of right now, what I'm seeing in the ES is that resistance right here has become support right here. The problem is we're kind of just chopping sideways if you really look at what's going on, because what we do is we actually have support here based upon the downtrending slope, but we actually have resistance right here based upon the uptrending slope. So I guess all I'm really trying to say is I'd probably just leave it alone for 24 hours until we can get firm confirmation on which slope is in control effectively. Okay. Anyway, Footsie. So this is an interesting one. So I said last week that I thought we're at resistance for a move to the downside. What have I just done? Oh, that's the dollar. Apologies. Let's go back to Footsie. So Footsie, I said last week in this area right here that I thought we're at resistance and I was looking for a bit of a push to the downside. And what I said was for looking for a push into this area here. And if I zoom out to give you a bit of perspective on why that is, we're actually paying attention to both slopes. Okay. So I'm paying attention to a modified Chiff. I mean, if anyone's confused about what a modified Chiff is, tell me. But it's effectively a version of an Andrews pitchfork. And this particular slope right here is the modified Chiff, okay? So that's the modified Chiff. All we've done is drawn in a line that is parallel to that slope. You can see this particular line here, parallel to the fork. We draw it up above to see if it catches the highs. And you can see it does. We actually caught double tap back in October of last year. We caught the high perfectly again in January. And so what I'm paying attention to more recently is that when we came back up, this was back in end of February. So where would have you looked for support? you would have probably looked for support. If I get all these circles out of the way, you'd have been looking for support, or sorry, resistance up in this area here, but we couldn't quite make it that high. So what I'm doing is I'm simply paying attention to the fact that we've actually topped based upon the prior high. So in other words, our ceiling, which was here, has stepped down, and now it's here. Stepping down in terms of the ceiling, down we come. I'm looking to see where we find support. I'm paying attention to support on two slopes. We actually have the steeper slope, which is this particular slope here, second touch, third touch, which is basically where we are right now. But combined with that, and you can see that we actually had a brief flush through that steeper uptrending line. Let me just get the line more accurate. There it is. We actually hit a slight flush through, again, to the prior low, and we reversed higher. So again, we were at resistance last week, we fell into support, and it looks to me as if we're bouncing out of support. This is, to me, a case of, and I talked about this over about the last week, this is a case of selling the rumor, buying the news. Everyone thinks that the UK is about to crumble as we go into Article 50. Of course, Article 50 gets triggered, and lo and behold, the world does not come to an end, and we start to recover back to the upside. So Footsie's bouncing out of support right now. Interestingly, so is the pound. So if we'll look at the euro in just a second. Oops, let's see if I can maximize this. Apparently I can't. Actually, let me just hide something quickly. That's better. See if I can just maximize this. There you go, maximized. Let's go up to the pound. So again, as is the case with the FTSE, doom and gloom. Article 50 is going to be triggered. The world's coming to an end. Oh, it hasn't come to an end. Let's bounce back out of support once more. So we've been following the pound. I'll be honest with you. I'm not a big fan of the pound right now. And all I mean by that is I just think that there's too much unpredictability in relation to the Brexit process that's been kicked off. Having said that, I don't think that they're going to sign the Article 50, the triggering of the Article 50 letter that was delivered yesterday, and then the world will end. I don't think that's going to happen. But I just think there's a lot of unpredictability. Regardless, we saw the first change of behavior in the pound down in this area right here, which was actually around about the middle of March, about the 15th of March, okay? So we've been paying attention to the fact that we actually had resistance, looking for support, resistance, looking for support, resistance, and then bang, we breached resistance to the upside. So around the 15th of March, we had a change of behavior. We took out resistance to the upside, and when we came back down, I said, well, now I'm going to look for support. In fact, I drew in the lines at the time and said, that's the place to look for support. Well, to be fair, there. So we missed it just by a few pips. Next place to look for resistance is here. And again, we held at resistance, then bang, up we go, come back down. Where would you look for support? Right there. Where's the next place to look for resistance? And we got resistance. And now look what happened. Bang, up we go. Where would you look for support? Back at that particular line. So we've had this continual stepping up in the British pound for about the last, what, 2 weeks? About 2.5 weeks. It's been working very well to the upside. We turned, like I said, we turned bullish. I was looking for a move up. I didn't really have a target to the upside other than we were bullish. And all I've said really for about the last week or so is if we reverse lower, that's the place to look for support. I said it back in this area here, which is what, about 2 days ago now? I think it was about Tuesday. I said when we were up around 25.5, I said the only place to look for support is right there at 23.75. We actually bottomed at, if I can get all these circles out of the way, 23.76. So a single pip away from support. So that's pretty much where I was looking for support. We even talked, I think it was on the Tuesday webinar, we talked about the fact that, you know, you would have had to have been particularly brave to get long in this particular area here, bearing in mind you really don't have a suitable stop, and it looks like we went pretty much vertical down onto the line. Except when you drill into a 5-minute chart to see exactly what did happen, what you'll see is that on Tuesday, yes, we did actually fall pretty vertically into support. But once we bounced at support, again, bearing in mind the line looks, you know, something like that, and we came down and hit it like that. So we came down, tagged it, and we moved back to the upside. So once we had done that, and then we saw a push, and then we went sideways, we actually did reverse back down to the same level. So there was actually 2 touches down around the 23.70s. In fact, that was 23.85, so about 10 pips above. So if you were so inclined, an entry in this area here with a stop below the prior low actually would have worked out relatively well, because we've actually risen up pretty significantly from there. But again, it's all down to the slope. So this particular slope on the British pound is a simple channel. So if you recall what we looked at in terms of the E-mini S&P a minute ago, it was derived from an Andrews pitchfork. I don't typically, let me reword that. A lot of people that use Andrews pitchforks consider it to be a religion. So what they will do is they will say to themselves, I'm going to draw myself in an Andrews pitchfork, there it is, and I'm going to be looking for support all the way along there. And then there's this stupid statistic, which I don't believe for a second, which is that 85 or 80% of the time price will gravitate towards the median line. No, it won't. And I will look for resistance up in this area here. That's how a lot of people will typically use an Andrews pitchfork. To me, it's a fairly brutal manner, which is simply that's support, that's resistance, and 80% of the time you'll have line price go to the median line or potentially through. I don't buy that. Okay, I don't buy almost any of that. The reason that I use an Andrews pitchfork or a modified Schiff or a Schiff is for one purpose, and it's to find a slope. All I care about is the slope. I don't get hung up on upper parallels, lower parallels, warning lines, shift lines, action lines. All I'm caring about is, have I found the existing or current slope? Once I found the current slope, I simply look to see whether we're stepping up or stepping down within the slope. That's all I care about. Okay? Again, I'm sure there's some people scratching their heads, but that's how I look at charts. So for me, when I find significant highs, all I will do is I will simply draw in a line that takes out those highs. I will clone it, and I will look to see whether I'm getting action anywhere else. If I see action elsewhere, then I will assume that that is an active channel. Once I have an active channel, I will then consider stepping up or stepping down within that channel. So again, resistance becoming support, resistance becoming support, resistance becoming support. That's what I look for. So that's how I look at charts. I don't get too hung up on horizontals unless there is not a current slope that I can see. So probably a good example is Nat Gas. Nat Gas at the moment, that's something I'm long, and I've been looking for. In fact, let me have a quick look at it, see where we are right now in Nat Gas. That's crude oil, by the way. That's the support we've been looking at in crude oil on the weekly chart. So let's go and look at Nat Gas. Where is it? In fact, where is it? There it is. Okay, so this is probably a good example of, it's very rare, but if there's nothing that I really see that attracts my attention in terms of slopes, I will simply look at horizontals. And this is an example. So you can see here that even though this isn't a particularly significant high, you can see that this is a level that has been abided by multiple times in terms of support and resistance. And in fact, recently as resistance, and again, just this week actually as support. And we've actually worked our way up quite nicely from there. So I'm looking for a move higher in Nat Gas based upon the daily chart, but the reason I'm looking at Nat Gas on a daily chart is actually because of this particular chart, and it's actually, again, back to a slope. So because of this particular slope, which is a modified Schiff, it's a huge modified Schiff. I'd been looking back in January, there you go. So back here, I'd suggested looking for support down in this area here. So what I'm looking for is, again, does resistance become support? We've actually had some bullish changes in Nat Gas. We actually came down, saw a bit of a flush. I wasn't too concerned really about the flush. I think people get too hung up on flushes. What I'm much more interested in than a flush is the close on the bar. So again, we come down, we test the line, up we come, we close well above the line. So I'm looking for a move to the upside, and it's panning out pretty well so far. I'm looking for a potential move up to about the sort of like 360s, 365, 367 area. Seems to be working out pretty well so far. But let me step back down. I think I kind of got somewhat distracted. Let's go back and look at treasuries, because this is something that I'm really focused on right now. 30-year treasuries are stuck at resistance as far as I'm concerned. And this is just a simple trend line. And this is another example of me just, using whatever makes sense on a chart. Again, people get so hung up trying to use, like deep math or, heavy algorithms or indicators. Look, it's a simple trend line. And all I was watching for, and you can see I put an alert line in this area here, and all I'm really watching for is Treasury's going to manage to get through this line of highs. And in fact, you can see even as far back as January, I was saying, look, that's the place to look for resistance. And well, we've come up, we've tagged it, and we're kind of grinding along it right now. And I'm watching to see whether we're actually going to see a push to the downside out of resistance in 30-year Treasuries. The other reason I'm watching 30-year Treasuries is because on a 240-minute chart, we've been watching, in fact, I was looking for support right at that line back on the 21st at 148.12. We actually bottomed at 148, I think it was like 15 or 16. and shot to the upside. Again, the slope seems to be working, because if you put in a parallel based upon the fork, you'll see that, broadly speaking, the two highs are abiding by the slope, so that looks nice. And then again, I said the other day we have to hold at support. Well, we did. We managed to grind up from support. But what I started warning about over the last couple of days is, well, look, this is great that we're coming up from support on the 240, but what are we coming up into? We're coming up into resistance on the daily chart. So I drew in this line of highs and said, really, we have got to take out this line of highs to the upside, or I am very nervous to the downside in 30-year treasuries. And I said that again this morning. Because of the fact that we actually have a decent correlation between 30-year treasuries and gold right now, then for me, if 30-year treasuries does that, then, I find it hard to expect gold to do that, because of the reasonable correlation that we have right now. And both of them are acting for very similar reasons in relation to interest rates right now. So I think what I'll do now is this, and this will be a newly added line. All I'm doing is, again, nothing particularly complicated here. I'm just taking the resistance line up here. I'm going to draw it down below, and I'm just going to wait and watch. And what I'll do is, let's see if we see some support down in this area here. So what I will do is, I will draw an alert line, something like that. Leave that as an alert line. Once and if treasuries do actually make it down into this area here, if we do actually start to see support, then I will actually consider that potentially we have a valid downtrending slope. Then I would look for resistance, ideally right there, because then that would be a case of support becoming resistance on the uptrending slope plus continued resistance on the downtrending slope. But unless 30-year treasuries in the next 24 hours reverses back up into this area here, which by the way it can do, shoulder, head, shoulder, indicating a decent leg to the upside through daily resistance, then at that point I would become more bullish. But for right now, I'm actually looking for the inverse. I'm looking to see whether we get resistance in this area here for a leg to the downside. This is a change of behavior. What we're doing right now is a change of behavior. This is the first time we've been below this particular line since basically the formation of the slope. So I'm becoming a little bit more nervous, treasuries. And what I've said for the last 2 days in gold and silver is equally, I'm a little bit more nervous gold and silver right now. Now, it's not as if gold and silver have like plunged off of a cliff, but I think if you go back and look at like 20 or 60 minute charts for gold and silver, silver less so. Silver's very perky right now. But if you look at gold, it really hasn't managed to take out much to the upside in the last couple of days. We made a high, I think it was back on Tuesday. And it's basically that high, unless something's happened since I started talking at 12 o'clock, the high has basically lasted since Tuesday. Silver's a bit more perky. Like I say, I think gold is being dragged on by treasuries right now. So if treasuries continues lower, I expect gold will get a little heavy. But silver seems really quite perky. But again, I don't expect to see gold moving lower and silver moving higher. It's possible, but I just don't see it. So if you're looking at gold and silver, that's the chart I would pay attention to right now. Treasuries. I want to see whether we can actually get through daily resistance on treasuries. Dollar index, by the way, also bouncing at support. This is support we've been paying attention to on the daily chart. Support, 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 all the way along here throughout September, October, November. Bang, support. This is where we're bouncing from right now. So because we've got dollar index bouncing, yes, I know I said at the beginning, I don't think gold's relating to dollar right now. And I still insist that that's the case. But it's not helpful. So dollar is rising, treasuries are falling. So to me, the tide is starting to turn a little bit against gold and silver. So I'm just a little bit more cautious over the last couple of days. I've been pretty bullish of late, but last couple of days I've turned a bit more cautious. And there is another reason. So pull it into view. Here it is. Here's the other reason I'm a bit nervous, gold and silver right now, more specifically gold. So we've got a very significant high in February, 1265. And what I basically said for about the last week is, if we can take, well, maybe even longer, if we can take out 1265 to the upside, I'd become really quite bullish on the daily chart, because at that point you effectively have a leg to the upside, nice pullback, healthy pullback, and then potentially you can see something like this. However, we've got to take out 1265, and I'm increasingly nervous that we're kind of hesitating just south of 1265. So I want to see gold punch up through 1265. We have not managed to make a fresh high since Tuesday, which was, I think, right back in this area here, Monday or Tuesday. And you can see that we've kind of like drifted sideways since then. Silver, well, silver, we've actually had a couple of bullish bars, but we had a couple of bullish bars back here. Look at these two bars right here that are arrowed. Now look at these two. So I'm kind of I'm a little bit nervous gold and silver right now. And again, we made a very slightly higher high this morning in silver before pulling back. So I'm not getting too excited to the upside just yet. If you look at gold and silver on 240-minute charts, there's another reason to be cautious. This is the uptrending slope we've been paying attention to gold. Okay, that's gold to the upside. So where's your ceiling? There's your ceiling. Resistance, resistance, resistance. Now where's our ceiling? It's a little sloppy, but you can see. There it is. If your ceiling steps down from here to here, then I expect my floor to step down. So when we came down into this area here, basically what I've said, and what I've said for the last, I don't know, week or so or more, is we've got to find support along this particular line here. And we did on the weekend. In fact, we closed the week right there. We closed the week right at support, which was interesting because silver was actually closer to resistance. Again, silver is more perky of the two. So what I've said was we've got to find support here, and of course we fell through it. We fell through it just, I think, yesterday. But there is something even more concerning to me than the fact that we fell through support, and it's this. And I talked about this morning, and what I said was we've actually now seen resistance at this particular line. So, you know, in the way that I was looking for resistance to become support in the pound or resistance to become support in the E-mini S&P, we're seeing the opposite here. Support has become resistance. So I'm a little bit nervous gold and silver right now. It's been a bit of a nothing day, in all honesty. We've gone nowhere really. Until we get back up above this particular line, which is around 1260 right now, I would probably just leave gold and silver alone for a day or so. A bit like what I said in E-mini S&P. You can see things are starting to churn a little bit. So I want to see gold above 1260 before I become more comfortable. Silver, completely different story. So again, we've had this nice uptrending slope in silver, looked for support down in this area here, bang, up we go, just a vertical move to the upside. And all I've been paying attention to over about the last 2 or 3 days is the same slope. But again, you can see we're just grinding. We're just like grinding sideways, basically. You know, we're making very slightly higher highs, but not really doing anything too significant. I'm paying attention to the moment that we have this particular line of resistance with one touch, bit of a flush, back to resistance. And then this morning, we popped up, tagged it a second time at 1831, and we pulled back again. So until we take out about 1832, 1833 to the upside, again, I would just tread very, very carefully. The best thing I can say about silver is that resistance back here has become support in this area right here. I'd looked this morning for support down around 1810. We flushed through it to the tune of about 2 pennies before reversing higher. So silver is much, much more perky, as I keep saying, than gold, but that's the channel right there. I want to see whether we can continue to the upside, but for me, it's all about gold getting back into the 1260s, and more importantly, treasuries turning north once more and potentially punching through daily resistance. So that's treasuries, E-mini S&P, Footsie, dollar index. Let's go and look at some of the currencies. So again, British pound, again, that worked out incredibly well. Euro, on the other hand, I'm bearish. And I talked about this morning, and I talked about it yesterday morning. I am bearish the euro. Why am I bearish the euro? Think about it. We're bullish the dollar index. Dollar index is bouncing from support. You can't have, well, I'm sure there's a way to do it, but it's incredibly unlikely to see the dollar and euro moving higher at the same time. And the reason for that is that the euro makes up such a massive percentage of the dollar index basket. You would need the other constituents of the basket to be moving incredibly for them to move the dollar index with the euro. It's not going to happen. So if you're bullish the dollar index from support, then you have to be bearish the euro. Plus, we just saw a pretty significant flush on the euro and a flush on the Swiss franc. Swiss franc is very well inversely correlated to the euro, so therefore very well correlated to the dollar index. Let's go and look at them. Get gold and silver out of the way. Euro, here it is, there's the flush. So there's your prior high, and those of you that have been in the webinar know that whenever we take out a prior high, I actually become bearish, because what happens is invariably most people say, oh look, we took out the prior high, let's get long right here. Dump, and down it goes. Equally, it happens to the downside as well. You take out a prior low and then it goes back to the upside. So whenever we see a flush and a bit of a reversal, I get really nervous. So we've seen a flush, There's your resistance. I'm looking for a move potentially down into this area here, which is down around 106.20, about 100 pips below where we are right now. Again, dollar index, we're looking for a move to the upside, so therefore we must be looking for a move to the downside in the euro. It doesn't make sense to do anything otherwise. Swiss franc, same story. In fact, this was support right here, a bit of a flush below support, and then bang, up we go again. I'm looking for a move potentially up to about the 101 area. We were watching the Swissy grinding along resistance for about a week or even more, maybe about 2 or 3 or 4 weeks actually, into FOMC. The euro was bouncing, Swissy was doing absolutely nothing and sitting at resistance, and then finally we got the interest rate decision and Swissy took a dump. We're now reversing back to the upside. The problem we have in the Swiss franc based upon this slope is, and the slope is working incredibly well. I mean, it probably looks a bit of a mess, but look at support. Look at the flushes. Remember I talked earlier about, I don't particularly care about a flush. I always care about the close of the bar. Well, look at the flushes that we've seen here. Look at the close of the bar here. Look at the close of the bar here. Look at the close of the bar here. Look at each of those 3 bars, how they flush below support, but each of them actually close well above support. So I'm actually looking for Swissy to move higher. I'm actually looking for the euro to move lower. So I'm bearish both of those pairs right now. I am bullish the pound. And again, pound has got bullish context. Bullish context on the daily chart, bullish context on the 240-minute chart. This is the British pound line of resistance that we tagged once back in February, once again back into February. In fact, I think that was January, February. And then when we breached it, we breached resistance multiple times on the 240. We breached resistance on the daily. We came back down, found support down in this area here, and we're moving back to the upside. I'm bullish the pound, but bearish the euro and the Swissy. Commodity pairs, I've actually switched. So here we go. Commodity pairs, I've actually become a bit more, what's the word? Encouraged in terms of the Australian dollar. And to a lesser extent the New Zealand dollar, let's be honest. New Zealand dollar is a bit of a mess. Here's the Kiwi for the last, 2 weeks, going absolutely nowhere. So you might wonder what we are looking for in terms of the New Zealand dollar. I'm looking for a move to the upside as much as I don't like the New Zealand dollar, and it's for one reason. Here's our downtrending channel, working very well. Now look, resistance here becomes support. Let's get all the circles out of the way. Support, support, support. We looked for resistance here as long as 2 or 3 weeks ago. Finally, we got up to it about, when was this? This was like last week, I think, or in fact, it might have been Monday. So we finally got to resistance on Monday. We fell back, double bottom, come back up to resistance. This was actually overnight, I think. This was last night. We fall back. I'm looking for a push through this line at 70.40. I think that if we are, let's get all these circles out of the way if I can. Bear with me. If I'm looking, and I talked about this for the last 2 or 3 days, if I'm looking for a move either through this line here or through this line here, it has to be the line to the upside. Purely because if you look at the most recent behavior, it is that resistance has become support. So therefore, I have to look for resistance to breach again and to become support again. I look for a continuation of the behavior. So Kiwi, I don't like it. I really don't like the New Zealand dollar at all. But at the moment, we have bullish context. The only thing that will change my mind is if we take out this line to the downside, at which point I then look for resistance. But for me, right now, it looks like we're in a wedge, sloping resistance, horizontal support. So I'm looking to see how we break out of this wedge in the New Zealand dollar. CAD is a little bit more bullish. I've been looking for a move down into this kind of like 131.5 area by virtue of the fact that crude oil is bouncing. So I think that the Canadian dollar crude oil correlation is a little bit weak, if I'm honest, but I'm looking to see whether CAD can get down into slope support. And again, I've been looking for a move higher in crude oil. Where is it? There it is. I've been looking for a move higher in crude oil for about the last few days, based upon the fact that we're bouncing from support on the weekly chart, but we are also bouncing from support on the 240-minute chart. There it is. 1 touch, 2 touches, 3 touches, 4 touches. So I'm looking for a move higher in crude. And what I said on, I believe it was the Tuesday webinar, was I would really just like to see it punch through this particular line of resistance, which obviously we did yesterday, courtesy of crude inventories. Crude inventories comes out, bang, up we go. We're up from like 48.5 to 50. We've been up to 50.5. So this is looking pretty good now for a bounce on the 240 as well as on the weekly. I'll probably look for next resistance I'm going to look for next resistance, actually not far above, about 51. That's the next place I would look for resistance. This is a line that has worked incredibly well. Resistance, resistance, resistance. It became support, I will now watch for it to become resistance. That's around 51. So because crude oil is strengthening, then I'm looking for a strengthening in Canadian dollar as well. And again, Canadian dollar is an inverse currency, so it strengthens as it moves to the downside. I'm watching for a potential move down to about 31.60. The other thing to pay attention to, back to the Australian dollar, again, commodity pairs all typically go in a pack, Aussie, CAD, Kiwi. I've been looking for resistance recently up in around 77.50. Blair says, you mentioned you track some ETFs now. Do you chart GDXJ? Yes, I do. Which ones have I got on here? Okay. This should give you an idea of what I look at. There you go. Does that help? I think I've got some more in there. There you go. So those are some of the ETFs that I look at. Actually, where was I? I think I was back on the 240s right now. So Australian dollar, that's right, Australian dollar 77.50. We got a punch up through 77.50. This has been resistance since effectively the spring of last year. One touch, second touch, third touch, and just I think about 2 weeks ago, fourth touch, and we fall away once more. Until the Australian dollar gets through 77.50 to the upside, I'm a little bit more nervous long term. But short term, as I said, I'm on the Australian dollar. We bounced from support. I'd been looking for support around 75.70s. To be fair, we bounced about 10 pips higher. We turned north. I then watched to see resistance, support, and for the last day or so, we've been watching resistance in this area here. And that seems to have just held. I mean, it's not like we've gone anywhere. It's not like we fell off a cliff. We've just basically ground along that particular line. So I'm actually watching for, well, you can see what I'm watching for. I'm watching for a move back down into this area here for potential support. New Zealand dollar, though, as I said, I probably have to look for a move to the upside. Just following the methodology, I have to look for a move to the upside through resistance because of resistance becoming support. But I don't like the New Zealand dollar right now, and as far as I'm concerned, that's what it's done, and it's basically very listless right now. What have we not looked at? I think we've kind of covered most of what we normally look at. Euro, Swissy, Pound, Aussie, CAD, Kiwi. Yen, I have no interest in right now. I think yen is just chopping around. I have absolutely no interest. To me, the chart to watch over the next day or so is probably going to be this one here. Treasuries. I want to see whether we can punch through resistance. E-mini S&P. I want to see whether we start to get some clear direction after having chopped out of the downtrending slope. We have, though, hit resistance on the uptrending slope, and we seem to be getting a bit of a breather. I just want to see which slope is in control. Gosh, what else is there? On the commodities, we looked at crude, we looked at nat gas, and that's working well. Bob wants to look at palladium. Actually, palladium's right there. What's that? That's copper. There you go. There's palladium. So I've been looking, it looks like, when was this? This was February. So I've been looking for a move down to and support out of that area there. That seems to be still working fairly well. We've actually morphed from a downtrending slope to an uptrending slope for palladium. So that's the channel that I'm paying attention to the upside in palladium. And by the way, copper, let's go back to looking at copper. In fact, there it is. This is one I have a special interest in copper right now. I'm looking at copper because of what I'm seeing on the monthly chart. Apologies, something there shouldn't be there, but regardless, I'm looking at copper for a potentially significant move to the upside. Okay, I'm looking for a potential move up into this area here. I'm looking for a move. In fact, we're paying attention to copper throughout last summer on the daily charts. Let's go down to the daily charts. There it is. So I started paying attention to copper last August, September. And what we were looking at was this modified shift. So what you're seeing is this particular channel right here, and we were looking for a move to the upside. And what I said back in August was look for support down here. Well, we tagged it. I then said back in October, look for support down here. We tagged it. Now look what happened. Up we go. And then what I said in January is, well, for those of you that have missed the move, that's the place to look for support. Down we go, tagged it once, tagged it twice, and up we go again. Resistance, resistance, resistance. The slope is still working. And as we fall back, what I'm paying attention to is rising floor. So I'm paying attention to the fact that we have a floor and now a floor. So that's what I'm watching in copper. I'm watching it on smaller time frames, but again, the reason I'm watching copper is because of the monthly chart and the potential for a significant move to the upside. Guys, I'm going to show you one thing. I rarely do the commercial push. I never do it really at the beginning of a webinar. I'm just going to do it now. If you're interested in seeing what I've been talking about each morning, just go to cogmancapital.com/promo and you'll pull up this screen here. And if you want to join for half price, you can do so. Okay, that's it. See, I just did like what, 45 minutes of charting and like 30 seconds of a push at the very end of the webinar. I don't do the whole commercial side that well. To me, my interest is much more on the trading and the charting. And if people are interested in seeing the charts, so be it. I've got members that have been members for, wow, since day one. I mean, I don't even know how long now, 6-7 years. And, you know, some people like it, some people don't like it. Francois, I know, likes it because I know, Francois, you've been around for a long time. Yeah, thanks, Francois. But again, if you're interested, you know, as I said, even for the first month, just have a look and you get to see all the other charts that we've got. Got the layout files as well, so you can download the layout files. I think I covered what I wanted to cover, guys. I'm not sure there's too much else. In terms of gold and silver, because I know everyone's always interested in gold and silver. As I said, just maybe be a little bit more careful right now. I know everyone's always bullish gold. You know, it's always going to go to $5,000, always. Silver to $200, always. I'm a bit wary right now. Just wait until we can really punch through 1832 in silver and through about sort of like 1260 in gold. But again, just keep an eye on those treasuries because they're a little heavy right now. And if they're going to be pulling gold and silver to the downside a little bit, maybe it's a good idea. Just step back and wait to see whether we can take out those resistance levels. And especially as far as gold's concerned, wait until we can get above that 1265. I'm not a big fan of the fact that we're kind of like hesitating south of 1265. Alrighty. I'm going to wrap it up there. I hope this has been a useful webinar for those of you that haven't seen a webinar before. I hope it's kind of just made you think a little bit about how you look at your charts. I'll wrap it up. And for those of you that are members, I'll see you in chat for the next few minutes to see if there are any further questions. You all have a great day. Take care, guys. Bye-bye.